Q1 was a turbulent start to the year for markets, but it wasn't all bad news. Today, I am joined by portfolio manager Harriet, who will help us summarise what happened in markets so far this year. Now, Harriet, I know it's not an easy task, but if you had to summarise markets into three key themes this quarter, what would those be?
I think they'd have to be policy uncertainty, doubts around US exceptionalism, and market volatility.
Yeah, the era of policy uncertainty is definitely upon us, particularly in the US. Now, I know this is changing daily, but what US policy changes were actually implemented in the first quarter? And maybe the more important question, what impact did all the uncertainty around these announcements have on markets?
Yeah, so we've seen very significant policy announcements around trade, particularly the announcements of tariffs. So early on in the quarter, we saw tariffs implemented against China, additional tariffs on Canada and Mexico, and tariffs on steel and aluminium. Of course, we'll also be getting announcements later this evening on reciprocal tariffs, which the market has been very concerned about throughout the quarter. We'll be watching very closely to see which countries are targeted, the level of tariffs, when they may come into effect, and to what extent there is retaliation from the US trade partners and room for negotiation. We could see the effective tariff rate in the US rise by 15% or higher. This is a rate not seen since the protectionist era of before the Second World War, so a very significant economic impact. We've also seen the administration create the Department for Government Efficiency, which is aiming to cut costs and eliminate fraud in the public sector, things that the government has tried to do in the past, but the way that the government has been going about this, it's created a lot of uncertainty for federal departments, agencies, and contractors. Again, increasing uncertainty in the US economy. We've also seen from a geopolitical angle, the US step back from its contribution to defence in Europe. NATO is still in place, but Europe can't expect the US to have a large role in European defence. So that, again, we've seen European fiscal defence budgets shift off the back of that. And all of this uncertainty can impact quite significantly consumer behaviour, business sentiment, and that in itself can be enough to slow growth and revise activity lower.
Yeah, it's very understandable, like with so much to digest. And as you said, more announcements expected this evening. Now, the second theme is kind of linked to this. It's doubts over US exceptionalism. But is that the only factor that's driving this, or are there other things at play?
Yeah, trade policy and high levels of uncertainty have definitely damaged the US growth outlook over Q1. And we have seen markets call into question the ability of the US to outperform other developed markets. But we also had announcements even early on in the quarter from the Chinese AI company DeepSeek, who released their open source model, which performed at similar levels to that of OpenAI, but did so at a fraction of the cost. And this raised concerns about potentially dampening the demand for AI chips from NVIDIA, for example. But it also really highlighted that the US could face material competition when it comes to AI development.
Yeah, and now given everything you've spoken about, it should probably be no surprise that the third theme was market volatility. Markets have been very volatile, there's no doubt about that, but it wasn't really all bad. So were there any asset classes, regions, sectors that benefited from this in the first quarter?
Yes, we've actually seen quite significant divergence in performance of various different regions and sectors. So given the changes in the relative growth outlooks, we've seen material outperformance of European equities versus US equities over the quarter. European equities outperforming the US by around 13%. We've seen within Europe significant outperformance by defence and financial stocks. Over Q1, the German equity DAX index was up just about 11%. Aerospace and defence were up nearly 29%. And then individual companies, you saw returns greater than 100% over the quarter. So really significant moves. We've seen US Treasuries perform well, returning 2.9% over the quarter as concerns about the US growth came into question and rates fell. And then high levels of uncertainty have increased demand for safe haven assets such as gold, which has really seen a positive return over the quarter as well.
Yeah, no, markets are definitely being kept on their toes at the moment with the pace of announcements, whether it's US trade policy, it's fiscal spending in Europe, or products competing with US tech. Now, we finish every quarter episode with our stat of the quarter, which this quarter is that gold was up over 19%, which is the most since 1986. Harriet, thank you very much. Thanks to everyone that has tuned in, and we'll be back next week with another interesting topic that has caught our eye.